In this market, you see a lot of different strategies. Some people buying the dip, some not buying the dip, some selling everything, and some predicting the next market crash that's going to change everything and the world is going to end and blah 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 blah. But for me, nothing has changed, and I think that you should feel the same way. Let me explain. Now, I don't mean to call anyone out. I mean, of course, everyone is entitled to their own opinion and they can make whatever content they like. But I do think it's important for the everyday investor like you and me to not only see those panic-inducing titles and headlines, but also to continue seeing the messages that we see when the market is doing well, which is to stick to our discipline and be patient. Because we all know that dips in the market will happen from time to time, and our strategies should already be accounting for that. So ultimately, panicking and second-guessing yourself will only ever lead to you making stupid mistakes and not achieving the results that you should be achieving. So personally, I really haven't been following any financial media or content lately, not only because it helps me to separate my emotions from the market, but also because I already know and trust my strategy, and it's still working exactly as planned. And that's also part of the reason that I haven't been posting as many videos lately, but I'll talk more about that later. Enough about that though, let's talk about what I'm actually doing right now. And basically I'm just doing what I always talk about on the channel, which is waiting for my stocks to recover, and in the meantime selling calls further out in time, always at a strike price above my initial purchase price. So if you're not already familiar with my channel, the main strategy I talk about is covered call writing, so I recommend checking out my full tutorial if you want to see exactly how I apply it. But when I say that I'm selling calls further out in time, I mean anywhere from about 4 to 8 weeks out. And the reason I generally only sell calls above my initial purchase price is because that's really how you can best take advantage of the strategy. You see, if you're collecting all of these premiums while the market is doing well, but then you turn around and sell calls below your purchase price as soon as your stocks drop in value, you risk selling your stocks at a loss, which would basically wipe out all of those premiums you've been collecting. So while covered calls perform best in a rising market, and that's really when you're generating the majority of the profit from this strategy, the way that you handle your portfolio in a falling market is also extremely important. And really it's an equal part of the strategy. You can't have one part without the other. So to explain exactly what I mean, I want to walk through an example of one of my actual current trades, and we'll talk about how I've managed it and how it's played out so far. So on January 11th of this year, I bought a 145 strike Apple Leaps call expiring in January of 2024. And at that time, it had a delta of 0.75 and it cost me $4,650 to buy. And Apple was trading around $175 per share at that point, so what I did to set up my poor man's covered call was sell a 180 strike call expiring in about 2 weeks, and for that I collected a premium of $106. But as I'm sure you're aware, the market didn't exactly perform well in January, so by the time that 2 weeks was up, Apple was down to about $160 per share. So what I did then was sell another call, this time at the 175 strike price and expiring 1 month out. And for selling that call, I collected another premium of $184. And this is basically the strategy that I always talk about on this channel, and it's really what I've been doing with all of my positions lately. That is, continuing to sell calls at or above my initial purchase price and selling the calls further out in time to lock in bigger premiums while my stocks are down in value. So when your stocks drop, you don't need to panic and you don't need to sell calls below your cost basis. As long as your stocks are fundamentally strong, which they all should be if you're picking the right stocks, you can trust that they'll recover once the market as a whole starts to recover. And again, in the meantime, you can continue to sell longer dated calls at a strike price above your initial purchase price, or even right at your initial purchase price if you need to. And that's actually what I did in this example with Apple, because I had bought my Leaps option when Apple was trading around $175 per share, and then I later sold a 175 strike call. And we can see that doing it this way, we can still bring in solid premiums. In this case, I generated about a 4% 1 month return even after my stock dropped by about $15 per share. And as of the filming of this video, I've collected a total of $359 worth of premium, which is about a 7.7% return on my initial investment over just about 2.5 months. Now, of course, my Leaps option is currently down by about $395, but I'm not worried about that because again, I'm only selling calls at or above my initial purchase price. So all I have to do from here is wait for the stock to recover. And once it eventually does, I'll be able to sell my Leaps at a profit or at least at break even so that I won't be negating any of those premiums that I've been collecting. So there's really only one main situation where I'd sell a call below my initial purchase price, and we'll get to that in a minute, but first I want to talk about what I plan to do going forward. And as you might have expected at this point, I plan to continue doing exactly what I'm currently doing until the market recovers. And while I aim for about a 2 to 6% return in premiums while the market is rising, investing. In these market conditions, I'm happy if I bring in more than about 1% per month. Because once the stock recovers, my portfolio will recover as well, and those premiums I've been collecting will just be the cherry on top. Now, as I alluded to before, some people may try selling calls at a strike price below their initial purchase price or even below their total cost basis. But personally, I pretty much only do that on stocks that I want to get out of, or at least that I'm okay with getting out of. Because again, selling a call below your initial purchase price puts you at risk of selling the stock at a loss. And if that happens, you negate some, if not all, of the premiums you've been collecting. So for me, unless something changes fundamentally with the company that causes me to no longer like it, I'll always sell calls above my purchase price. And I think that's where a lot of people go wrong, and that's where the strategy really becomes powerful. So as you can see, my strategy is pretty boring right now, and that sort of leads me into why I haven't been posting as many videos lately. Well, number one, for those of you that aren't familiar, this is actually my second channel. So my main channel is a cooking channel called The Regular Chef, which of course I'd recommend you check out if you haven't seen it yet. But regarding this channel, I feel like I've shared most, if not all, of the necessary information about the strategy I use. So if you go through my previous videos, you should basically know everything you need to know to get started. At this point, I think the main benefit for you, if you want to take it further, would be to see how I'm actually applying the strategy. So that's what my Patreon is for, where you can get access to my actual portfolio spreadsheets that I update with my holdings in real time. And depending on which tier you join at, you can get notifications whenever I make a trade, or even talk to me every month and ask specific questions about the strategy. But if you don't want to join on Patreon, I do also have a newsletter that's completely free, where I send out regular updates on my Road to Financial Freedom portfolio, along with other occasional stock market content. So if you haven't already joined over there, I definitely recommend you do that as well. Now, of course, that doesn't mean I'm gonna stop posting. I will still be posting videos at least once a month, but it just won't be every week like I was doing at one point. But with that said, if you missed my last Road to Financial Freedom update, where I gave a lot more insight on some of the current trades I'm making, be sure to check out that video right here. Either way, thanks a lot for watching, and I'll talk to you in the next one.